Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar shrugged off the long tail bearish shooting star posted on Thursday and now looks towards the key level of 68 figure 40, which was last posted back in August and July. As the bulls position themselves to tackle the level of 68.40, this could lead on towards 69.70 cents if breached. Turning to economic data, the Australian Bureau of Statistics report showed unemployment remained at 4.2% in August, matching expectations of the previous figure. With the Federal Reserve cutting interest rates by 50 base points, the US remains quite heavy and now falls to a fresh low of 100.60, with the target remaining at 99.5. Keep an eye on this top side as the close above New York, as I mentioned, of 68.40 should see stop losses trigger, as the market has been seeing this point as a good supply area, and if demand accelerates, then therefore looks for a rally on towards, as I mentioned, 69.70 cents. Turning to the euro, the market also rebounded and shrugging off this long tail bearish gravestone doji that was formed here. Looking at the technicals, a break above the level of 112 figure 15, which should be seen today, would lead on to a rise of 113.45 to 55 as a potential target, with any pullback still likely to be shallow around 110.80. Turning to dollar yen, the market thought twice about taking on the level of 143.45 and backed away quite sharply. But we haven't broken down as yet, so still remain on your guard, and therefore traders should monitor signals closely and adjust risk management, as market volatility is likely to increase due to the bullish or mixed technicals. If we see another rejection from 143.45, then this should put the market back on track towards the downside, seen somewhere around 136 to 138. Sterling surges after the Bank of England kept rates on hold at 5%, however did signal possible cuts in November. Nevertheless, the rally has now put the market firmly in place after clearing the level of 132.25.35 to target the 133.45 to 55 to 134 and reassess from there. Any pullback looks for support around 131.70.85, but with this engulfing candle does give concerns that the bulls may be in a prime position to extend the rally. Wrapping up with commodities, we see a strong rebound off this trend line seen around 2,548, and from there has put the market bulls in a prime position to take the tackle back to 2,600. Now, I am a little bit bullish now, considering the fact that we've regained momentum, rejected the bottom side, and a close above 2,600 could put the position back to around 2,800 as a trajectory target. Unless we see a break of this level of 2,543 to 47, then the broader call still looks to 2,600, and as I mentioned, maybe on to 2,800. Wrapping up with oil, the market maintains its bullish bias and still on track to take the target to $72 a barrel and reassess from there. Any pullback should find support around the level of 68.80.90. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the new weekend.